We've been getting a lot of questions about cryptocurrency, so I thought I'd spend a little time on that. Cryptocurrency is a digital asset designed to work as a medium of exchange that uses cryptography to secure its transaction, control the creation of additional units, and verify the transfer of assets. As a matter of fact, one of the biggest things to come out of cryptocurrencies is something called blockchain. And if you're interested in it, it's a good thing to go look up on the internet and find out exactly what it is. It could actually revolutionize banking in a lot of different industries in the future. That's one of the biggest benefits of it. Now, what are they worth? What's a cryptocurrency worth, or what should we pay for it? Well, it's basically worth whatever you're willing to pay for it. If you're willing to pay $23,000 for a Bitlight Ether Dash Ripple coin, then that's what it's worth. Those are actually some of the names of the different currencies out there. Is it an investment, is the next question I get. Well, not by the strict definition, it's not. Definition of an investment, you have to have a cost of capital, and currencies aren't investments because there is no cost of capital. Now, what is cost of capital? Well, an example I used on the radio show is, let's say we've got a savings account and they tell you that they're going to pay you $1,000 of interest. Well, the bank is going to pay you that interest, and based on a 1% interest rate, the value of your account we can figure out by going backwards. They're going to pay you $1,000, 1% interest. Well, the account must be worth $100,000. Now, if we're talking about stock, and we know that the earnings on the stock are $1, we know that historically large U.S. stocks sell for about $15.99. So, by definition, our stock should be worth around $16. And that is the cost of capital there. Well, if we're talking about currencies, we're talking about zero earnings, right? There are no earnings with currencies. And our coin is basically going to be worth whatever you're willing to pay. It's kind of shaky ground, really, when it gets down to it. So what are some of the threats with these virtual currencies? Well, one is a supply increase. If the number of bitcoins or whatever currency we're talking about increases, the value can go down. Or we could have an alternative currency that actually wins the day and becomes more popular, and the one you bet on doesn't do that well. That could be a real risk. Or hacking or theft of your currency could be another risk. Or change in attitude. What if some people just say, I just don't believe in this anymore, and they don't want to pay the high prices? It's kind of like the tulip bulb craze or the electronics craze of the 60s, or oil craze of the 1970s, or bonds in the 80s. And every decade has its own little bubble that it tends to happen, and people get sick of it, and all of a sudden the price drops and you're left standing there with nothing. And then the other thing that could actually affect it is government action. So the government could say, hey, we're going to tax, we're going to outlaw this, or whatever, and that could cause problems in the future. Well, what's the big motivation that drives people to pay these big prices? Well, we call it FOMO. And it is the fear of missing out. I actually stole that from Warren Buffett. Fear of missing out. I don't want to miss out on the next big thing. So they keep buying at a higher and higher price until somebody says, wait a minute, this is crazy. One of these things that I would stay away from. Not an investment, doesn't fit the definition. And I hope that helps.